Hello all, welcome back to SAP channel. Today we learn more about the interview questions for 3 plus years of experience. This is like a little bit advanced questions were asked by the interviewer to the interviewee. The touch base on the fundamental topics. Apart from that, they would be asking you the real-time business scenarios and you can give the example and thoroughly you can explain the scenarios. Let us start the video. The first question is the FI and integration process. Here, the FI integrations process is like P2P plays a vital role with the integration with the FI. Here you can see the P2P cycle starts with the activity called purchase requisition, and you can see the responsibility is and the journal entry, we will not get any journal entry once you raise the purchase requisition, and you can see the T code, that is ME51N. And the second thing, once the PR, the purchase requisition, is approved, you will raise the purchase order. Again, the responsibility lies with the and there is no journal entries, and the T code is to create the purchase order ME21N. Once the purchase order is raised and the vendor is notified about the purchase order, vendor will send the goods receipt. I mean to say he'll send the good and we will receive the goods. Here the FI and integration starts. Here the inventory account debtor to GRIR account, that is BSX account debtor to WRX account. Again the transaction code is MIGO. Once the goods are received and your stock is leveled up, you will be sending out, the vendor will send out the invoice, and you will receive the invoice and you will do the invoice receipt. Again there is an integration of FI and here with the journal entries, GRIR account will be debited and vendor account will be credited. Here WRX will be debited and vendor account, in the sense KON account, is credited. The T code is MIRO. And finally vendor has to be paid by the company. So again here the vendor payment is completely a responsibility lies with the finance team. Here the vendor account debtor to outgoing bank clearing account. The T code is F11O or F-53. F-53 is for the clearing account. So your P2P cycle ends with the payment to the vendor. It starts with the internal document called purchase requisition. You have identified the requirement of the material and you will start raising the purchase order, and order is approved and it is notified to the vendor, and vendor will send the goods, and in return he will ask us to pay us through invoice, and invoice is also received and processed. Finally the vendor has to be paid and your P2P cycle ends and your liability also ends with the payment to the vendor. The journal entries for this: when purchase enquiry or the purchase requisition is started, there will be no journal entries, and even when the purchase quotation is created, there will be no journal entries, and at the last and the external document purchase order is been approved also, there is no final implication is there. Only when the goods are received, you are liable to pay to the vendor. That is the inventory of raw materials account debtor, or in other words stock account debtor to GRIR clearing account, and when the invoice is received, GRIR clearing account debtor to vendor account. So here when the goods are received, the standard movement will be 101. The BSX account is debited and GRIR account, that WRX, will be credited. And when the invoice is received, again the GRIR clearing account will be debited, vendor account will be credited. This is the journal entries from P2P perspective. Moving on to the next question. What are the common reasons for invoice blocking during the service invoice posting? Like the common reasons for invoice blocking with respect to the service invoice posting. The answer should be the invoices for services can be blocked for the following reasons: price differences between purchase order and the invoice, quantity mismatches with the service entry sheet, or missing the service entry sheet's approvals, tolerant limits exceeded, maybe that defined in customizing thing that would have differed, or the tolerance limit are being highly exceeded above the limit. These are the reasons to block the invoice, and it is flagged for review in T code called MRBR, and it requires the manual release. Here the manual intervention takes place an important role, wherein you need to see what went wrong with the invoices for services. Is it really the tolerance limit, or any SCS approval is missed out, or any quantity mismatch, or any price differences? These needs to be analyzed, and only then you can release it through MRBR. Example, a service vendor charged for more than agreed rate in PO, so the invoice was blocked for price variances and it is sent for approval. The tolerance limits are set in the backend configuration and it can be adjusted based upon the business policy. Moving on to the next question. How can a blocked service invoices be released in SAP? As I said, the blocked invoices are released using the T code MRBR. The manual intervention plays a vital role. MRBR is the T code to release the blocked invoices. You can filter the invoices by the company code, by vendor number, or blocking reason. After investigation, thorough analysis, if the block reason is a valid and corrected, example, you can raise a credit memo, or the PO needs to be changed. These are the few corrective measures taken care, and after that the invoice can be released for the payment. That's the person intervention plays a vital role in the blocked invoices. Example, in a support, a user requested a help in releasing the blocked invoice due to a small price variances that is within the tolerance limit. It was released from MRBR without editing the PO. Always check why an invoice was blocked before releasing it, as it is a compliance issue. Moving on to the next question. What are the prerequisites to post a service invoice? Here they are asking you what are the prerequisites to post a service invoice. The answer is, before you post a service invoice, the PO should be created with the item category as D for the services. A service entry sheet must be created and accepted. PO and service entry sheet must have the matching quantities and values. As I said before, if there is any mismatch, it goes to the blocked. Invoices will be blocked. In vendor must be extended. Check if the vendor must have extended to the purchasing organization or to. These many things are a prerequisite to post the service invoices. Example, a user tried posting a Miro but got an error because SCS was not been accepted. Once accepted, Myro was successful. You cannot skip the SCS services. You cannot skip this since the acceptance act as a GR like in the standard movement type 101. The SCS acceptance also plays a important role in case of posting the service invoices. Moving on to the next question. What is the process of invoice verification in SAP S/4HANA MM? The process of matching the vendor invoices with the purchase orders and the goods received. These are called the three-way match. That is matching with the purchase order, goods receipt and the invoice receipt before posting. This should be the ideal way of processing the three-way, and it also ensures the controls are placed and there is less chances for the errors. It is executed using the T-code Myro, which creates an accounting document and updates that vendor liability, because you will be liable to pay once you have received the goods. SAP also supports the parking invoices until unless if you need any further documents or through any approvals required, you can use the T-code MIR7, which is useful for the approval workflows. Invoice verification can handle the credit memos, unplanned delivery cost and the subsequent debits. If there is any differences happened or the change in the prices in the changes have been updated, we can ask the vendor to give us the credit memo, or if there is an unplanned delivery cost, we can use those unplanned delivery cost in the subsequent debit to pay to the vendor. Example, in an S/4HANA project for a manufacturing client, once the goods are received against the PO, the vendor sends out the invoice. The accounts payable team uses the T-code Myro to verify the invoice, to validate and verify the invoice. If the quantity and the price matches with the GR and the purchase order, the invoice is posted. If there is any mismatch, and the tolerance checks will apply, and the invoice may be blocked for the payment until it is resolved. As I said, this needs a manual intervention to have a thorough analysis. Use the the GR based IV indicator in a PO. Why? Because if this tick has happened, you can post only once the GR is created. Until unless the GR is posted, you cannot post the invoice. Thus, you can have a better control over the invoice processing. Ensures the tag codes and the tolerance are configured correctly to avoid the blocking. Here, they are saying that you can check the tax codes. For example, if a country like France, Germany, for a country like France, it is 20%, and Germany, it is 21%, and so on. So you should check that the tax code have been assigned correctly and the tolerance also been configured correctly or not, to avoid the blocking of the invoices. Just to have the GR based IV indicator check for a better control. Thank you all, and do subscribe. Your subscription is a big motivation to me to do more such videos and make your life easy and get the interview cracked in a better way, and getting a job is also a major change in your career. All the best, and do comment and do let me know how best I can come up with the interview questions. Thank you.